What's good, everybody? Happy Monday. Welcome to the Doe Show. We are financial advisors here. I'm Dustin Tibbetts with Jazz Wealth Managers, SEC Fiduciary, Registered Financial Advisors. This is a show that we do to just help you with your dough. We talk about all kinds of different things on the show here. Today we're going to talk about the best investments possibly for 2019. Now, of course, I'm not making a suggestion here what you should buy. I actually just want to help you hone into areas that you may be interested in. So we're going to cover them here for sure. Now, when you look at 2018, the way that it finished, if you're an investor in the stock market or you paid attention to anything news-wise, you notice that the markets did fall quite aggressively towards the end of the year, from October, November, December, just straight down. So if you just started investing in October, you kind of pick some bad timing to get started, but you also pick some good timing because you get to see what the markets are really capable of. So here's what we're going to talk about. Going into 2019, how can you look at what happened and see what opportunities may be there for you, things that you may be interested in? Well, when it comes to investing or short-term trading or mid-term sort of trading or the really long-term investments, usually you have the question of, well, what do you like? Do you like to buy discounts, meaning buy stocks that have fallen or markets that have fallen? Or do you like to look for stocks that are holding up and performing better when the markets fall? A good example would be like if the markets fell, and let's just say they fell 10%, but yet there was a stock that you were watching, or an ETF or fund or whatever, that only fell like 2%. Well, maybe there's something to that, right? That may be something you want to research, and so we call that relative strength. So we'll say either you are the catch the falling knife, buy the dip sort of trader, meaning you want the steepest discount on the best quality stocks or sectors as possible, or you're the person that says, no, I don't buy discounts like that. I like to buy good, strong stocks that just seem to refuse to pull back. So we're going to cover both of those for you here today. So know that we're on both sides here. Whatever you prefer is all good there. If we help you in some way, maybe hit the subscribe button for us. But if we take a look at 2018, you really probably would quickly notice that technology was the worst, about a 30% decline. And so if I could maybe zoom in a little bit there. There you go. So about a 30% decline in technology stocks overall. So, let's see. Did this work here? Just want to make sure we're dialed in and everything is good there. Yeah, okay, sorry. So a 30% decline in technology stocks. Now, you really have to dig further to kind of see. So if you look back there, you've got tech stocks. If you like buying the stocks that are falling, I tried to draw it with a little arrow down, you got about a 30% discount going into the end of 2018. But it's not everywhere, right? You could find some good strength in tech stocks, but if you look at the small cap tech stocks, meaning your smaller valued companies, those were the sort of more aggressive to pull back. And then software. So if you dig from the technology sector, you go into the little subsectors or industries that some people call them, you would find that small cap and software companies were your worst performers. Now, be very careful here. You got 41% of those companies sold off over 20% through the end of 2018. So that should be kind of an alarm that, okay, some of these just got beaten up a little bit. Some of these may be probably bad companies, and some of them are just not really suitable for most people that are just getting started investing. A good example would be symbol RDVT. It's probably not suitable for most people. It has had a severe sell-off. There's likely some problems there. So you want to be careful when you sort through a list. If you said, okay, Dustin said tech has fallen, I got my 30% discount, maybe more. Now I want to find good names in there. You just want to be very careful when you're looking through software and the small cap stocks that you don't get too carried away and find something that's really in trouble. Snapchat would be another example. What did it lose, 60% last year? So Snapchat really suffered. And I noticed that was like on the sidelines. So when I sorted through the entire list, all the different sectors and everything, Snapchat kept popping up, and I said, you know what, just put that one aside because I don't know. That one's a tough one. But know that that's one of the more aggressive ones that sold off last year. Now, if you're on the other side of the fence and you said, oh, I don't like that, don't like the discounts, I don't want to mess with those, I want to find good strength, good strong areas of the market that maybe pulled back going into the end of the year, but not as much as everything else. Well, that's going to be healthcare. I put it up on the screen or on the blackboard for you. Healthcare has recently pulled back, but overall was one of the better performers. Actually, healthcare added about 5% on the year for 2018. Utilities were basically flat, but that's known as one of the stronger areas as well. Now, many people feel that healthcare is going to do well here going into this year, and the reason for that is because split Congress, right? If they're split, they won't be able to get anything done. There'll be a lot of talk, a lot of back and forth about we're going to do this or that, but in reality, they won't be able to accomplish anything, which means healthcare companies will continue to be able to profit as they have. So because of that, I think that's what held up the healthcare sector going into the end of the year. Now add to that, you had a 12% pullback going into the end of the year. So if you go, okay, I like healthcare because it's been strong. I agree with the Congress thing, maybe no major changes for a few years, and so that'll let those stocks just perform. Well, then you got a little dip inside of strength. There's a big difference between the tech sector getting just hammered, right, and the healthcare stocks just pulling back a little bit into what they call strength. So that's that. Hey, a little interesting side note here. If you take the entire healthcare sector, you know that we talk about speed here a lot in at Jazz. Our portfolios are all managed with speed going, as the main driving factor there. Well, if you take all the healthcare stocks in that sector for the S&P 500 and you equally weighted them, meaning you didn't give any bias towards one or the other, you did the exact same percentage in every single stock there, you would actually have and had a portfolio that not only beats the market on the way up, meaning the S&P 500, but does not beat it on the way down. How about that, huh? A lot of people say, well, hey, if you want to beat the market on the way up by 1% or 2%, you're going to beat it on the way down, likely by a little more. Actually, if you go back and look, if you equally weight the healthcare sector, you beat it on the way up and you did not beat it on the way down. So kind of interesting. Not telling you how to invest. We always are looking for different ways to do things like that. So I thought I'd point that out. Now, our portfolios, we take a mix of the portfolios that you see right on our website, and we put them together so that someone can be aggressive, someone can be conservative, someone could be moderate, or maybe focused on growth and income. Our government bond fund is yielding 3% right now, or almost 3%. So that's how we focus on that. But back to the healthcare stuff, because I just thought that was an interesting portfolio geeky stat there. In the healthcare space, what you have there is your equipment makers, your medical equipment, and then the healthcare plans. WellCare, Anthem, Humana, they stick out as being the strongest. Doesn't mean they're the best to invest in. It just means if you're one of those people that likes the pullbacks into strength and you like buying the stronger stuff, you might want to look at those as being something that you consider. Of course, it has to be suitable for you. Abbott Labs, Boston Scientific, they've also been stronger in the equipment, medical equipment space. So just all that is me saying, okay, let's look at healthcare. Oh, hey, that's strong. Let's look at the strongest industries inside of that. Oh, hey, here's a few, medical equipment and then the healthcare plans. Oh, hey, let's look at some stocks inside of those industries that have done really well. That's all I'm doing right there. So that's that one. Lastly, we've got financials. Right? You've seen the financials. We've talked about them a lot here. A lot of people are starting to feel like the Fed will not hike rates at all in 2019 because of their recent speech and how they kind of walked back everything that they said that they were going to do there. So what that means is that banks will now have a sort of a forecast, meaning they'll know how they can lend out money and what those returns are going to be. So banks have been a little bit shaky because we don't know if banks are lending out and how much are they going to make relative to rates in the future and everything. So now the banks can go back to the whole idea of borrow short, lend long. If you don't know how banks make money, that's like the phrase that they use, borrow short, lend long, and hopefully that with some flattening not of the yield curve, but some flattening out of the rate hikes. And if they take a break, then the banks may be able to benefit a little bit right there. Of course, the financial, we did a video on this one in the past, actually. The financial portfolio, built a portfolio of 62 different financial stocks to show you how that could actually beat the market on the way up and not on the way down, and give you a little bit of a discount there. That's really all I have for you. Was that too geeky? Was that too much for being in the space there? I just, everybody else is posting, oh, hey, 2019, get some stuff done. I thought I would share maybe something more actionable that you guys can use for 2019, best places to invest. So I'm officially deleting it off my list. If you have any questions, I'm happy to answer. If you're like, what did he just talk about? Know that that's what we do here at Jazz. We're not advisors that go and buy mutual funds from other companies, charge you to manage it, and charge you on the funds that you pay the expense ratios. We build and manage our own funds here, and because of that, we can update our customers on how we're doing, what we're adjusting. We always post our performance, and of course, even this Thursday, we're doing a portfolio update to let everybody know how things are going. What changes have we made? There it is. David says he prefers, welcome back, by the way, prefers stocks that have been undervalued when the markets fall. There's always, it's so weird how there's people on both sides where some people go, like I'm a dip guy. I like when stocks fall. I like when they fall really fast. So for me, that's attractive. For somebody else, they're scared. They're the sellers to my buying orders. You get what I'm saying there? Alwyn, you're correct, right? It's easier said than done. We're going through it right now with the markets where a lot of our customers are like, hey, everybody's scared. Should I be buying now? And that's great, but there's always going to be people that go, oh my gosh, is this the end of the world? So when the markets fall, people think they lose. My best analogy to that, by the way, is if you imagine on your phone, you pull up your account and you go, well, what? I lost some money today or I made some money today. You can see it second by second. Imagine now, you don't do this with your house, but imagine if your house had a minute-by-minute update of the value. Can you imagine how emotional people would be? But in reality, are you going to lose your house? Like if its value falls 30%, did you lose anything? You didn't lose it. But people would be more emotional and likely would turn over their properties more and more. So, I don't know. Can you invest in international government treasury bonds? If you mean by that a mix of those, you certainly can. International government treasury bonds. If you mean not one particular country, absolutely. Yeah, there's plenty of great options for that. In fact, what's the name of PIMCO? No, he doesn't work. Janus. So Janus funds just invested in Argentina. Huge risky bet there. Actually pretty interesting. Oh, just got really dark. If the U.S. files for bankruptcy, likely day before, what happens to bonds? If the U.S. files for bankruptcy, that's the equivalent of the world ending. So ask yourself, how many times has that happened in the past? You like the geeky stuff, Jason? I love it. Oh, Mr. Sprinkles, one of the government employees there shut down. Is it the IRS you work for? I was going to do a video on the IRS. By the way, your tax refund, you're probably not getting your tax refund on time or maybe at all if the government's shut down. So this is a great time to go look at your W-4, go look at how you can adjust your withholdings to make sure that you get every penny back and you're not relying on the refund, because every study shows the people that rely on the refunds are the people that need it most. So if you just change your withholdings to better reflect giving you every single dollar back, you'll be, you won't have to rely on the government to reopen to pay you. All right, that's all I have for you. We'll be back later for the closing beat. We'll cover the stock market, everything, the good, the bad, and the ugly. So far, so good. Not too bad today. But we'll cover it later and talk to you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.